Sometimes there's a negative event and a stock takes a beating, and that can be a time when you can find good bargains. Here to talk about three stocks that look attractive right now is Jerome Dodson, founder of Parnassus Investments in San Francisco. Hi, Jerry. I want to start with Gilead. Now, I know Gilead is the company that makes the hepatitis C drug, which has been very effective for that disease. But I guess one of the things about that is when you're curing people of a disease like that, you start to at some point run out of new customers down the road, and I know investors are worried about the growth here, and this stock has gotten pretty cheap right now. What do you like about Gilead?
We like their laboratory. We like the ability of them to come up with new products. And of course, as you pointed out, their hepatitis C medicines are declining in terms of revenue because people are being cured. However, they also have an HIV franchise too, where they sell there. This competition is coming in there, but nevertheless, HIV cannot be permanently cured. You have to stay with the medicine for a long time. So it's a little different than the hepatitis C. What I'm looking for to pull the stock out of the doldrums is a new product. Whether it'll come out of the research lab or an acquisition, I don't know. But they have a history of making good acquisitions, developing good medicines in their laboratory. So I think that they'll be able to do that, and that's why we bought the stock. At the same time, the downside risk is not much. The stock is selling at the low 70s, which is very low. The PE ratio is below 7. Wow. So that gives you an idea of the value of the company, or the value it's trading at right now.
And I guess there's a lot of cash still coming in from those hep C drugs that you can put to work on some of the newer things.
They have a huge amount of cash. They have more cash than the Federal Reserve.
All right, let me move on to a company I'm all too familiar with, Whole Foods. That's where my family does the grocery shopping. I have had some grocery bills that have looked like mortgage payments, but we're not complaining. What do we? I know that Whole Foods has sold off because there's a lot of competition now for some of the organics and things like that, and they've tried to lure customers with more of a value proposition. What's going on with Whole Foods that you like?
Are you and your family still shopping at Whole Foods?
We are. My wife will not even hear of shopping somewhere else. Okay.
So they have some very dedicated customers. Unfortunately, they're not all as dedicated as you are. And their other competitors are coming in with both natural foods. Yeah. And
you see it even in the standard grocery stores. You see it even
Kroger's, Trader Joe's, even the Safeway. And I heard that even Walmart, of all people, was coming out with that. So the competition is in. The growth rate has fallen down. In fact, the last time the revenue wasn't growing, or it's growing like 1%, very small. So they are coming up with a new store concept. I think it's called 365. Yeah. And what it will do, it'll bring these same kind of foods, but they'll be less. The cost will be less, and there'll be less selection. So your wife probably is not going to like to go there, but we want her to go to Whole Foods anyhow. But some of the people that have been drifting away to Trader Joe's,
maybe a Trader Joe customer.
Exactly. Well, we want to get them in there, and so I'm hoping that that would help them. But in any case, the stock is down so low, there's not too much downside risk, in my opinion. So anything we're able to improve it should move the stock higher.
That's always, when we talk about the grocery bill, it's always her argument. She says, well, the 365 brand, if you look at the eggs and you look at the milk, it's cheap as a regular store. So maybe the 365 chain will do well for them. Let's move on to American Express. Now, they lost that big Costco account, a real meaningful part of their business. What do we like about American Express here?
We like the company from a marketing standpoint. They do a lot of things to build relationships with their customers. So, for example, if you are an American Express customer, and I think it'd have to be at the platinum level, you get a lounge, a free lounge with breakfast or lunch or dinner while you're waiting for your plane, and it's really good benefit. And they have a lot of other benefits like this that they have in terms of their reward system.
This is like the new thing. Everyone used to try to figure out the miles system with the airlines. No one's doing that anymore. Now everyone's trying to figure out the rewards with the credit cards, and they're going bonkers, some of these cards with the rewards program. So it's really hot right now.
They are, and what this does, it does two things. Number one, their marketing expenses have gone up quite a bit, so that cuts into their earnings. Also, there's a lot of competition that even the prime end of MasterCard and Visa, they're starting to compete in that premium market too. And so that's really why I was saying Costco, that's why American Express is having a difficult time.
But you think the stock is cheap enough to offset that sort of tougher competitive outlook?
Yes, I think they got some plans, some good marketing ideas, and we'll have to see exactly what they come through. But I think their brand is good enough that I think that they'll be able to come out of it. And it wouldn't take much to make the stock go up quite a bit, given where it's trading now, which is almost down to $60 a share.
Okay, thanks, Jerry.
Thank you.
And thanks for watching.